Mohamed El-Erian of Pimco. Dr. El-Erian, if we look at the new normal and if we bring it up to date, you got a huge worldwide following on that, some that oppose it. Give us an update on the spirit of nominal GDP and real GDP in America right now. It's come back just a little bit, but how little bit is little bit?
Yeah, you know, there's a sort of a view that when you have a crisis, you bounce back quickly. And that is true if your crisis is cyclical in nature. If your crisis is structural in nature, then the process of resetting an economy takes a long time. And there's been a lot of research on this, including a great book recently by Ken Rogoff and Carmen Reinhardt that looks at that. And our notion of the new normal is that if you go item by item analyzing the dynamics in place, you come to the conclusion that unfortunately growth is going to trend up at a lower rate than it has in the past. Unemployment will stay stubbornly high for a while. Government regulation is going to increase, and therefore we are looking at some important structural changes going forward.
And Ken, before you get to your question, camera guy, come in here and look at this chart. This is top-line GDP, folks. We're looking at top-line GDP, and we're way off the trend, which would be out like $15 trillion now, and we're only at $14.4 trillion. We got a long way to go to get back to that center trend line. Ken, I know you've got a question for Dr. El-Erian.
Well, Mohamed, of course, the new normal is lower growth, higher unemployment that we've gotten used to. What would it take for you to abandon that position?
A couple of things, Ken. It would take first some signal that the private sector can again carry the burden of world consumption. And for that, you really need credit to be restored. So if we see credit restored, if we see these pipes that are currently clogged into the real economy, if we see that restored in a meaningful way, then there is a chance that we may be able to restore the sorts of growth rate that we got used to. That will be the first issue. The second issue is dealing with the government debt. We have had a massive shock to public finances in virtually all advanced economies and in the United States. I mean, we're looking at deficits now in the trillion-dollar level for a number of years. So if there was somehow a magic solution to that issue, then we would revisit. I think the reality is it's very difficult.
Well, this is important. A whole set of questions, Mohamed. I was talking with our Mike McKee yesterday about this idea of the budget presented by the president the other day. What will be the Wall Street reaction to that? We see tips break evens, five-year forwards moving ever higher, really through pre-crisis levels. How will the market react to the deficit presented the other day, the budget rather presented the other day?
Yeah, I mean, the budget illustrates to you the dilemma right now. In the short term, there's need for continuing to stimulate the economy because unemployment is persistently high. Over the medium term, you need some credible pro-growth fiscal adjustment. And what the budget tried to do is to signal the administration's commitment to both. What the market saw was the first bit, which is higher deficits. And, of course, it has reacted through the interest rate market in the manner that you would expect it to do and through the break-even that you talk about.
Well, when you see the break-even go through and you see the development of the deficit, what is the El-Erian prescription for this administration? Do we need a speech? Do we need a policy change? What would you suggest there?
You know, Tom, this is a really tough environment for policymakers. There's so many competing demands on them. I don't think, and I know for certain, I'm not smart enough to tell them what to do. We focused right here for our clients on what's likely to happen rather than what should happen. And what's likely to happen is that we're going to be in the muddle middle for a while, pulled on the one hand by deficit concerns and on the other hand by employment concerns. So we should expect a bumpy journey going forward as the economy resets. There is no silver bullet. There is no instantaneous resetting of the U.S. economy. It's going to take time.
Bloomberg Television, thank you so much for stopping by.